All right. Good morning, everyone, and thank you for joining us during the Lytham Partners Spring 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners, and extremely pleased to invite Larry Heaton, Chief Executive Officer from Zomedica, ticker symbol of ZOM on the NYSE American, to join us here this morning for a presentation. Before I do turn it over to Larry, I do want to remind everyone that if you'd like to schedule a one-on-one meeting throughout the conference and have not done so already, you can go ahead and reach out to me. My email is Blum, B-L-U-M, at lythampartners.com, or you can visit the conference landing page, lythampartners.com/spring 2024. From there, you can click on the Investor and Attendee Registration tab and put in your request there. So, Larry, thanks again for joining us. The floor is all yours.
Thank you, Robert, and good morning, all. I appreciate the opportunity to present to you this morning, and I encourage you to take a look at our safe harbor statements at your convenience. So at Zomedica, we are about the business of advancing animal health and veterinarian success by bringing innovative diagnostic and therapeutic technology to veterinarians to help them do what they really love to do, which is to improve the quality of care for the pets and the satisfaction of their pet parent clients, but also, very importantly, to help them do what they really need to do for their practice, which is to improve the workflow, the cash flow, and the profitability of that practice. So we compete in a very large market, well over $100 billion when you count everything associated with animal care. But when you zero it in on veterinary services, which is the segment that we compete in, a $62 billion market last year and growing. In fact, it grew quite a bit during the pandemic. 23 million new kittens and puppies were brought into households during the pandemic. Most of them, frankly, highest percentage of demographic that brought them in were the youngest among us, assuring a future generation of pet parents. And note, I'm saying pet parents as opposed to somebody that owns a dog or a cat, because increasingly pets have been humanized, not only in this country, but also many countries around the world. As it turns out, there are a whole lot of things that people would give up before they would not take their sick or injured pet to the vet. And so that means that this animal health U.S. veterinary services market is large, it's growing, and it is resistant to economic downturns. And that's the market that we enter with a variety of products for Zomedica. In fact, we currently have 5 product platforms on the market, and if every practice in the country, equine, small animal, mixed, bought our technology and used it, we'd be looking at a $2.5 billion annual recurring market, split between therapeutics and diagnostics. And we've been doing pretty well in these areas, not only from revenue growth standpoint, but also from a gross margin standpoint. Last year, gross margins were 69%. We guide to 65 to 70%. So it's a very good business model for Zomedica. Our products each have a recurring revenue stream associated with them. And you can see as they're detailed here, whether they're going into the small animal practices or the equine and mixed practices, there's a recurring annual market here. Some of the products, our VetGuardian and our PulseVet products, we also sell the capital. While we're a razor and blade company, and we focus on the blades, quote unquote, we're not averse to making some money off the razors as well. And so you can see that we have plenty of opportunity ahead of us. With a $2.5 billion potential opportunity, with 25 million in sales last year, you can see that we've barely scratched the surface. A lot of growth ahead of us. Our products are split into therapeutic devices and diagnostic instruments. The therapeutic devices, PulseVet's used in the clinic, Assisi is sent home with the pet parent, and our diagnostic products include a microscope, a laboratory analyzer, and a monitoring device. Each of these, though, fulfill our 5 pillars. They improve the quality of care for the pet, the satisfaction of the pet parent client, and can improve the workflow, cash flow, and profitability of the practice. You can see that we've, over the last 2.5 years, as we began making acquisitions and launching products, you can see we've had a steady cadence of products being launched. And as we look to the future, we intend to continue the same. As I mentioned, we've been doing pretty well, right? So we went from no revenue in 2020 to $4 million in 21, 19 million in 22, 25 million in 23. And this year we're guiding to 31 to 35 million in revenue. And you can see that each quarter that we've had over the last 2.5 years, each quarter has set a new record for that quarter's performance. We are a little bit seasonal. We sell a lot of capital, especially the PulseVet, in the fourth quarter of each year. So you can see that the revenue spikes up in the fourth quarter. It recedes a bit in the first quarter, and then it continues to build from there. But we're seeing year-over-year growth every quarter over the last 2.5 years. Pair that growth, 33% overall last year, with super good margins, 69% industry leading, and a very manageable cash burn rate with plenty of cash in the bank. And you can see that we are a company that have great prospects as we move forward. So let's talk a little bit about the products, right? So the PulseVet shockwave system is a system that delivers a sound wave that is created by the combination of the generator that you see there with the screen and the handpiece that you see there attached to the long cable. It projects that sound wave into the body and triggers the body's own regenerative properties. It increases cytokine production. It increases neurogenesis, or more nerve growth, angiogenesis, or more blood supply growth. Anything that circulates, it promotes that circulation. It reduces inflammation, it reduces pain, and it's super helpful in a variety of indications. In horses, where it has grown to become a standard of care for equine veterinarians, there are 40 clinical indications. In small animals, which started a little bit after, in fact, started about 2.5 years ago when we acquired the company, it's about over 20 clinical indications. And all of these indications are backed by clinical research. There's almost 30 now published peer-reviewed clinical journal articles in the animal health journals specifically about PulseVet shockwave and the many benefits that it provides to the pet patient, and also provides benefits to the veterinarian, and of course the company as well. So we sell the system for $30,000, and then each handpiece is just over $2,000. Each handpiece has 50,000 pulses. It will do either 50 horse procedures or 60 to 65 small animal procedures. They use a few less pulses in the small animal cases. But in any event, the average charge for these is around $300 per. So when you think about say a small animal vet, if they've got 5 patients a month, and they can have many more than that, but if they have only 5 patients a month that need on average 2 treatments, that'll generate at $300 per treatment, that'll generate $36,000 in revenue in the first year. And their total all-in money in the first year would have been $34,000. So this is something that pays completely for itself in that first year if they're just doing the average number of procedures, which is going through 2 trodes a year for small animal. Horse vets use 3 trodes a year, which is even better. Now, because we're concerned about cash flow, we have a third party that finances this system for veterinarians. No money down, no money for the first 6 months, and then $100 a month for the next 6 months. So their first year capital outlay is $600 total. And then, of course, the note starts amortizing, but there's no prepayment penalty. So they can take that $36,000 in revenue that they generated during the year and completely pay the system off. It's a good economic model, certainly for the company. We make very good margins on these trodes. About 60% of our revenue in PulseVet comes from the trodes, which lets you know that it's a firm, solid foundation for continued revenue growth. And it's a great economic model for the veterinarian. Best of all, it helps a lot of pets. Now, when they're done in the clinic, they're going to send the patient home, and maybe they didn't use PulseVet. Maybe it was some completely different thing and they didn't need PulseVet. But the Assisi Loop is a device that the pet parent can take home with them. The vet can send a healing home. This uses targeted pulse electromagnetic field therapy. It's been used for generations in human health. We have the exclusive in the rights in the animal health market. This loop, and we sell it in 20 centimeter diameter, and then a smaller one in 10, an even smaller one for dental pain. We have lounges or beds that are built into these, that have the loops built into them. The loops themselves we sell to the vet for around 200. The vet turns around, sells it to the pet parent for around 300. It's a good economic model for the veterinarian. It lasts 150 treatments, then they need a new one. And they can get that new one and go back to the vet and buy it, or they can go to Chewy or Amazon or Walmart, because we have a lot of online retailers that are selling this product to repeat customers, and there's a lot of repeat customers. What this field does is it increases endothelial nitric oxide, which in turn decreases pain and inflammation. And so whether it's a pet that had a dental procedure and needs one for a short period of time, or it's an arthritic dog that, maybe goes in, for treatment once a year or maybe every 9 months, but in between, the pet parent can deliver a nice soothing, calming therapy with the SEC loop. Shifting gears to diagnostics, the TruView microscope is a digital cytoscopy platform that is unique in a couple of ways. First, it prepares the slide for the user. If you're a technician, you've got to put the blood on the slide, then take another slide and smear it just so, get a good feathered edge. And then you've got to fix it and dry it and stain it with 3 different stains and dry it each time. It takes about 5 minutes, could take more, maybe a little bit less, but right around 5 minutes for every slide that they have to prepare. With the TruView microscope, using the TruSpot device, you simply put the blood on the slide, you put the slide in the machine, it does the rest. And so it knocks off 5 to 10 minutes per slide of meaningful time for those techs, freeing up their workflow. Now, once the slide is in the machine, it's going to give an image, and that image is going to be produced by a top-of-the-line, best-of-class imaging image train that includes a liquid lens that allows for seamless focusing on all of the vertical layers of a slide. Not only does it have a great image, which allows a veterinarian to review it and make their decision, but in the event that they're not sure of the decision they should make, they're not sure what they're looking at, a simple push of a button, and within 2 hours, one of our board-certified pathologists will get a report back to them. We charge about $500 a month for this device, and then $75 for each pathologist report. That's today. In the near term, yet this year, we will be providing AI interpretations as well, which means that every slide that goes in will generate an AI report. We'll charge $15 for that. And then if somebody wants a pathologist report, they want a little bit more than the AI, then we'll reduce that fee to $60. This is a terrific product. It's unique in the marketplace. We're just barely getting started with it as we released it last year. It's the most recent product that we've launched. We have certain great expectations as we move forward. Laboratory analyzer called Truforma. This is a device into which you put a sample of blood, and then that sample of blood will then be analyzed to determine the level of whatever assay we've decided to use. We have now 11 assays. Over the last 2.5 years, we built from none really in earliest of 21 to 11 today, and we'll be launching another 5 assays this year. Now, there are other laboratory analyzers in the veterinary space. There's huge companies, IDEXX and Antech, very large players in this market. And they're doing the routine, everyday, well-patient visit tests, and they do them just fine. But there's a lot of assays that still have to be sent out to the reference lab, and that's what we focus on. And we're able to focus on doing assays that no other point-of-care device can produce, because we are the unique, we have the unique ability to use the bulk acoustic wave sensor technology that was developed and pioneered by a company called Qorvo. What this does is it measures the mass, right? As opposed to measuring the color change of what they're looking at, it measures the weight, which gives you a more objective viewpoint. and also allows us to have a very expanded dynamic range. And so as you look at the list of assays that we provide, there's only one, Total T4, that you can run on an IDEX machine, for example. We don't compete with the IDEXs and the Antechs of the world. We respect the heck out of them. But what we do point out is that there are certain assays that those machines cannot run. The alternative is to send to the reference lab, and we stand in there. Now, business model, we provide the instrument at no charge, just like IDEX and Antech do, and then we sell the cartridges. And our agreement is pretty simple. Here's the device. As long as you're buying cartridges, you can use it. Now, as I mentioned, we have a number of assays that are on the market today. We have a number of assays that we'll be launching this year. And then we have we have plenty of new assays, new targets as we move forward. So as you can see, some of these are for cats and some are for dogs and some are for horses. We just launched our first equine assays last year, the first and only assay that can measure for a condition called equine Cushing's disease or pituitary pars intermedia dysfunction. Very important assay, and it's, again, the only one at the point of care. We expect to launch another 4 to 5 assays this year, and we're super excited about the progress that we're making. VetGuardian is a monitoring device, a wireless, no-touch monitoring device, one that hangs on the outside of the cage, points at the animal, and is able to pick up the vital signs, the temperature, the pulse, and the respiration of that animal with nothing attached to him. You know, you or I are in the hospital and they put these things on us to measure this and that or the other thing, and that's all fine and good. But a dog's going to chew those off, toot sweet. And so the alternative that vets have now is having a tech sit there and watch. They don't have the staff to do that. Even if they did, they don't have X-ray vision. What this device does is it gets that information, it puts it up into the cloud, and then it brings it back down to a browser. You can see in a laptop on the upper right of the screen here. You see at the very top of that laptop, there's what you see. I don't expect you to actually see them, but there's actually room for 8 different tiles. Each tile represents a different VetGuardian monitor that's monitoring a patient. Even then, even when it's on the flat screen TV on the wall of the vet's practice, or maybe it's on a laptop, or maybe at their home, and they're looking at their iPad or their telephone. In any case, this device is going to monitor these pets when they're at their most vulnerable, post-surgical, ICU, and alone in the clinic overnight. And if anything goes amiss, they go above or beyond the preset ranges, those that are deemed to be safe, that the vets can customize, then all heck is going to go sound off. The machine makes a noise, the monitor flashes, the tile that is affected becomes the main thing that's on the view screen, and a text or email message is sent to whoever is designated by the practice to get it, to make sure that that vulnerable pet is taken care of as soon as possible. Now, these last 3 devices, the diagnostics, they generate data, whether it's an image or whether it's a lab result or whether it's a monitoring session and a video, because as I didn't mention, but the VetGuardian also has video, regular video, night vision video, and thermal imaging video. But all of that data, video, image, whatever, all of that goes to the cloud, and we own that data. And then we push it back down to, as I mentioned before, browser, could be on the wall, could be on your laptop. And as we move forward, this Zomedica platform and the data that we've accumulated become not only monetizable, but meaningful in ways that we can continue to assist veterinarians in fulfilling their mission. We're not done with our products, right? With the PulseVet system, expanding into new indications. Recent journal articles have come out talking about using it for fibrotic myopathy, talking about how it would prevent 25% of cats being tested from being misdiagnosed for hyperthyroidism. Lots of new indications for horses. You can use it for asthma and for bleeders. So we continue to drive new indications for these devices. And for our other devices, the VetGuardian will have a product later this year that will be applicable to horses. We'll continue to develop new assays for TRUFORMA, and as I mentioned earlier, AI is coming for TRUVIEW shortly. Now, we manufacture all of our own products in either our facility in Georgia, which is where we manufacture all of the electromechanical products, or our facility in Plymouth, Minnesota, which we acquired when we acquired Qorvo Biotechnologies in October of last year. There, we manufacture the cartridges. It's a highly automated system that manufactures sort of the biotech gizmos. These facilities are highly scalable, right? Roswell, we could generate 125 million in revenue. We can manufacture to 125 million in revenue on that side of the business. Up in Plymouth, we recently invested in a robotic automated machine, or I should say platform, to produce the cartridges. It has the capability to produce 1 million cartridges a year with a single shift. So we've got plenty of scalability there, and it helps us to keep the margins at an industry leading level. As I mentioned earlier, last year was 69. Some of these investments that we're making, like in Plymouth, brought our margins down in the first quarter of this year to 66, but we're super confident that we'll be able to, by the end of the year, get back much closer to that 70% level. To bring these products to market, we've adopted an omnichannel strategy. We want to make it easy for the customer however they want to buy. And so we have a direct sales force with 35 sales territories. We have internal salespeople. We have professional service vets to help with clinical support in the field. We go through U.S. animal health distributors, Patterson, MWI, Midwest, Covetrus, all the major ones, and some minor ones as well. And we also have, as I mentioned, an online store and go through e-tailers. All of this is simply to say that we have the infrastructure in place now to conduct a sustained sales effort moving forward, and we leverage the heck out of marketing experiences. Last year alone, we put 60 key opinion leaders on the podium at various animal health medical meetings, all to drive awareness and to spur adoption. At the same time, we host Zomedica University every Wednesday afternoon, where key opinion leaders talk about a topic of interest to veterinarians. They get continuing education credits, which they all need, and of course, they all feature one of Zomedica's products in the discussion. So, in addition to the U.S. operations, we also have sales in various countries around the world. This is an area of focus for us this year. We expect to expand beyond the countries that we're currently in, and more importantly, expand the number of products. So we did about 15% of our revenue last year with only PulseVet and Assisi on the market. We recently announced that we got the CE mark for VetGuardian, and that we're working on the CE mark for TruView and TruForma. We expect to launch all those products this year into our international distribution network. And while we've only got a couple of countries featured here, I'll just point out, PulseVet, for example, is now in use in 30 countries around the world. Well, the US plus 29 more. We expect to get all of our products sold where any of our products are sold as we move forward. Now, we built the company through acquisitions, 5 acquisitions over the last 2.5 years. We still have, as I mentioned earlier, as the end of last quarter, about $91 million in liquidity. And so we've got plenty of opportunity to not only continue to grow organically, and needless to say, to service the declining burn rate, which last year was about 10.7 for the year. We expect it to be less this year. It'll drop pretty quickly as we go through the quarters into the third, especially into the third and fourth quarters. But we're also opportunistically acquisitive. You know, we believe that there are companies out there that will meet our criteria, which is, of course, the 5 pillars: improve the quality of care for the pet and the satisfaction of the pet parent, increase the workflow, cash flow, and profitability of the practice, but also that are profitable or would be profitable if they were in our hands, so that they can be accretive to earnings. And because while we have a manageable burn rate, it would be better to have no burn rate and to get to profitability. So we see that as a pretty key milestone, right? Where are we headed? We're headed from 25 million in sales to 50 million in annual sales. And when we hit a run rate of 50 million in annualized sales, we should be profitable at that point. And we expect to be there by the end of next year. Beyond that, we think it takes another couple of years to double again to an annual run rate of about 100 million in sales. And that's a pretty good near-term horizon for the next 3.5 years. But at the same time, we continue to look for ways to get there sooner. And so we will continue to look for acquisitions, just as we have done over the last 2.5 years. So the results have been pretty good. As I mentioned earlier, 19, 25 million in the last 3 years. This year, we're guiding to 31 to 35 million. Our margins, you can see, once we began integrating companies and manufacturing the products ourselves, we've been able to maintain really good and desirable margins. Took a little dip last quarter as we're integrating the acquisition of Qorvo Biotech, which we closed in October of last year. As we do those things, however, we expect, as I mentioned earlier, to go up. And in any event, our guidance is 65 to 70%. And as I mentioned earlier, cash is essentially 91 million at the end of last quarter. When we say cash, it's cash equivalents, available for sale securities, things like that. We're not just leaving the money in a savings account. So we're very comfortable with what we've been able to accomplish to date. And we've given guidance to 31 to 35 million for this year. We expect that the 31 million will be served by pretty much our PulseVet and Assisi products, those products that are pretty mature in the marketplace. And so we could see that growth. And then the difference between 31 and 35 will be filled in by the diagnostic products, all three of which, two of which, the TrueView and the VetGuardian, were launched just last year, and the TrueForma until last year really only had 3 assays out there. So we've got lots of growth coming from, high percentage growth coming from the diagnostics, and good solid growth coming from PulseVet and Assisi. And so as we think about Zomedica, it's a very significant market opportunity, meeting super critical needs in a large growing market that's resistant to economic downturn. All of our products are highly differentiated from the competition. Most have no competition, and those that do still have unique features that set them far apart from that competition. We've got a solid foundation in the United States commercial channel, and we have a start on the international channel, and we're building that through the course of this year. We'll continue to expand the portfolio through both internal development as well as select opportunistic acquisitions. Our pathway to profitability is enabled due to our very good margins and the strong sales and growth. And importantly, we have no need to raise any capital as we look out into the markets. And so with that, I will again thank you for your time today, and I look forward to talking to many of you during the one-on-one episodes. And should that not be convenient, reach out anytime. We're always happy to talk.
Bless you. Fantastic presentation, Larry. Appreciate it as always. As Larry mentioned, if you'd like to schedule a one-on-one throughout the day here, go ahead and either reach out to us, or obviously Larry's always very accessible here as well. But you can visit the website, lythampartners.com/spring 2024. From there, click on that investor and attendee registration button, and we'll look to get you taken care of. So I have a number of presentations coming up throughout the day. We hope everyone enjoys the conference. Larry, once again, thank you very much.
Thanks, Robert. Appreciate it.